Good evening. This is Brian Shannon from Alpha Trends. As you probably are aware, the Fed has been meeting today and will continue their meeting tomorrow. And at 2:15 Eastern Time, the Federal Reserve is going to make any changes that they might have to monetary policy or announce that they haven't made any changes and what their bias going forward is. Now, these Fed meetings a lot of times bring about very, very choppy trading, and the 2 to 3 hours leading up to the actual announcement, it's really, really quiet. A lot of low volume, just sideways waiting. That's really when the indecisiveness comes in. Typically, first thing in the morning, sometimes there's some good trades, but then as people sit on the sidelines, I think that what I'm going to do is head out for a while, go get a workout in, or do something productive rather than sit there and watch stocks do nothing. And afterwards, though, it gets very, very volatile. A lot of people don't like to trade options expirations. Option expiration Fridays. I agree with that, and I rarely trade, or I usually trade smaller. And I think the same goes for Fed announcement days like we have tomorrow. The activity following a Fed announcement can be a very, very profitable trading if you're very, very good and you're very disciplined. However, if you make a mistake and you don't admit it right away, there can be some extremely wild swings, and most people, I think, should probably not be trading during that time. Um, there's just too much jockeying going on to really gain an edge, and I'm like I said, probably going to take it pretty slow tomorrow. The market, especially this time, is at a very critical juncture. Based again on this weekly time frame. We've got that two-thirds retracement. We've got the 200-day moving average. We've got that prior support there on the Nasdaq. So I don't want to get into that too much. Let's go ahead and take a look at a few stocks that it looks set up for some trend continuation. First of all, on the long side, I've got Excelsius Technologies, symbol Apple Charlie Larry Sam, ACLS. And this stock's in a nice uptrend. It's pulled back toward the rising 10-day moving average on light volume here. It looks like it started to regain a little bit of momentum. It looks like, it's probably due for a test of these highs after the stock gapped higher, and that's up near about $7.20. Looking at an intraday time frame, I think that the stock showed some strength in here today. I think you could buy it. Probably, I would probably be interested in buying it maybe after it tests 650 and then takes out 655 or so. And the most I would probably be willing to risk on this stock is about 15 cents, so maybe down towards $6.40. And next up, let's take a look at ATVI. This is Activision. Apple, Tom, Victor, Indian. And on a daily time frame, let's first start out with, we have the 10 just crossed back up through the 20. They're both rising. It's also above the 50-day moving average, which is rising. We had big volume on the way up right in here the last week. And subsequent to that, the last couple sessions, we've seen smaller volume as the stock starts to digest some of these gains. Now, 15 looks like a pretty easy target to me, assuming that the stock isn't an uptrend. It's going to make a higher high. I think that this prior, level up, back of these highs from back in May over here look like the likely target where you might encounter some resistance. So that would become a target that I would be looking for. As far as where I might consider purchasing it, I think on this one again, I would probably also look for a pullback down towards about 13.95 and then buy it above 14.05. That's the way I like to do it. And then I would set my stop probably below this low. Maybe get a little bit more aggressive and put it below this low here at 13.89. I'm not sure. I guess it would depend on what the overall market environment is looking like before I would decide exactly how I wanted to do it. And obviously, you're going to want to take a look at these ideas and decide whether they make sense for you at all, and where you might want to enter them or decide not to enter them. Fossil Incorporated, symbol FOSL. Is in a nice uptrend here. You can see on the weekly time frame how it just broke past what's been a pretty important level of resistance over the last six months or so, and it broke past that level. We did start, see some volume coming in on that upward move. the stock looks like, it really doesn't have much resistance up towards about $23 a share. Now at $20, I don't think that's probably going to be my price target, $2.50 away. Instead, I would look more for, maybe 21 and a half or so I think would be a reasonable target. The stock's been holding very nicely above this rising 10-day moving average. This prior level of resistance has not been tested as support, and I don't think it has to. But it's just showing a real nice pattern in here. And the way that I might be interested in playing this stock would be on a move above, not today's high, but yesterday's high. Actually, it wasn't the high, but the afternoon high at 2053. And what I'd like to see happen here would be, let's say this was that high a couple days ago, and then we had kind of this type of move, and here's where it closed today. What I'd like to see happen would be kind of a test of that 20 and a half level, maybe two tests, and then a breakout. That way, I wouldn't have to put my stop way down here. Instead, I could put it right about at this level right there on Fossil. The other way to play Fossil would be to look for a pullback towards about 20 and a quarter, and then buy strength above 20.35. So that's two different ways that I would consider buying this stock, and I probably like the second one better because it takes into account first a little pullback rather than chasing all this strength here. But if it was to run up initially through that 20.53 level, I wouldn't buy it. Only if it tested it once, pulled back, made a higher low, and then rallied would I buy it under that circumstance. So my preferred way of entering it would be wait for a pullback to about 20.25, then buy some subsequent strength in the stock. That way maybe we get a little bit of a shakeout first and get the stock in some stronger hands. Harris Interactive, symbol HPOL, broke out on some nice volume a week and a half ago. It's been consolidating those gains in a pretty tight range above this rising 10-day moving average, and that tells me there's not a lot of aggressive sellers in there. So looking at the daily time frame, it looks like we're at least at a 150-day high. Let's take a look at a longer term time frame. You can see that this is not only an annual high here, but when we back it up to this weekly time frame, we can see that maybe the stock, is going to first encounter a little resistance up near 6.5. But I think your real target is probably up near closer to $7.50 a share. The stock is looking bullish. Let's take a look at this. We could say the measured move. Let's measure it just from about 560 up to 620. So that would be a 60-cent move. Add that to the low of this pullback, and that will give us a price target of about $6.60, which is a nice move, 40 cents on a low price stock like this, 45 cents. So what I like, excuse me, about this move in here is that we saw some strength today, and it rallied right up to R2, which is why I always like to take a little bit of profit off at that level if I'm long. And at the end of the day, we had a little washout volume, so it's pulled back deep enough here. Now I think I'd like to buy the stock. The way I would do it is probably above this level, $6.20 or so. Put my stop down near 6 and a dime. And again, a price target I would be looking for maybe about $6.60. So, as far as my risk reward ratio would go, I'd be looking for about 1 to 4. I'm not very good about being subtle about not pointing out price targets here, but that's the way I'm going to do it. Aspen Technology, symbol AZPN. We looked at this last week as a short sale, and earlier, I think maybe yesterday, Monday, as a potential short sale. I still think that it's looking like it's undergoing some distribution, and this might have been a pretty important decline here with this heavy volume. Now, it hasn't cost us anything yet. We've tried to make 2 entries in it, but the stock hasn't given us reason yet. I do like this, though, that it's making these lower highs in here. Now, if it can break below this level, below 1105 or so, that's where I would probably enter the stock on a short. And there's no way I would risk more than this high right here at about 1140. So I wouldn't be risking more than about 35 cents. And I still think that you can see probably 9.5, maybe be a little bit more conservative, say $9.80 on the downside. So, nice risk reward ratio was what I'm looking for here. This amount of reward for, this being the potential amount of risk that I perceive in the trade. The way that you look at it might be different, so change your entry parameters and exits accordingly. Garmin International, Garmin Limited, whatever it's called here. Garmin looks like it's maybe tracing out a big head and shoulder top. Um, the 200-day moving average is still rising, so I'm not sure how aggressive I would be size-wise in this trade. But it is finding now the 50-day moving average as resistance, and that's declining. So that's good to see. That is the 50-day moving average is declining. And on a 10-minute time frame, you can see the stock transition to a downtrend here. We've got the red moving average below the blue, below the green. So that's telling me the short-term, intermediate term, and longer-term trends are lower here. However, I think that we can see a rally up towards about $43.50 near that 5-day moving average. I'd like to see it rally up to $43.50, and then I would probably short it taking out this little peak here, which is about $43.20. So if it goes up to $43.50, I'm going to then set an alert that tells me it's approaching $43.20. As it breaks below $43.20, that's where I'm probably going to enter a short sale. I'd probably set my stop right up above this level here, risking about 35 cents maybe, which is a low risk for a big stock like Garmin. And I think that, with a little luck, the stock can get down towards about 41.5 or so. And again, making for a nice risk reward, and that's what it's all about, is trying to find the high potential trades, that is, trades that are going with what the primary trend of the stock is, finding a low risk, what looks to be a low risk entry point, and that's defined on where the support or resistance is that we can set our stop, and making sure that we do have the proper amount of reward relative to the risk that we're taking. And just, if the stock's truly in a downtrend, well, it's going to make a series of lower highs and lower lows. So it ought to take this low out right here at 41.20. But I want to be conservative with my price targets. I'm not looking to make the whole thing. But as the stock keeps dropping, you want to lower your stop below those lower high. I'm sorry, just above those lower highs in the case of a short sale, or just above or just below the higher lows in an uptrend. I had my television on today, and I kept hearing Kramer say, "Bulls and bears make money, and pigs get slaughtered." Well, that's true, but I like to say that bulls and bears make money, greedy pigs get slaughtered, but disciplined pigs get rich. And the way to be a disciplined pig is to change your stop according to what the stock is telling you. And I think that's the better way of doing it. My name again is Brian Shannon. Thanks for listening, and I'll be back tomorrow.